What is up, guys? It is your boy Blessing back again with another class. It is crazy you dropped out of school, but you find yourself back again in this class. Okay, guys, I'm gonna be analyzing NZDUSD. Before I analyze NZDUSD, I just want to teach you something about liquidity because a lot of people do not understand the term liquidity. So, right here, we have a bearish market. Why am I saying it's bearish? Because you can see, guys, it dropped down and then not right now it's a pullback. Maybe let's say it gives us a change of currency and then pulls back inside the change of currency and then starts selling down again. What is liquidity, guys? Liquidity is clearly every high, every high, every high, every high, every low, every low, every low, every low, every low, every high is liquidity in the market. This is liquidity. This is liquidity. This is liquidity. This is liquidity. This itself is liquidity. Every high is liquidity. So the market has to take out liquidity every time, boy. So let's say, although I'm not a trend line trader, excuse me, very, very, very excuse me. Let's say we have a trend line right here, and then you have another trend line up here. Let's say you have a trend line, and then the market hasn't uh, the market hasn't pushed down yet. The market hasn't broke the trend line. It's just still inside the trend line. What do we understand as a trend line trader? The market is to break out of the trend line and then retest the trend line. Let's say like this. The market has to retest the trend line and then starts selling down again. So when you know that, and then start selling down again, and then take out the current low, this low, and then take out that low. So that is where you place your TP as a trend line trader, something like that. As a trend line trader, you place your TP like this. Stop loss maybe a little above that. So I don't know where, but yeah. Okay, yeah. So you have something like this as a trend line trader, okay? But me as a smart money concepts trader, I don't need this thing. I don't need this trend line thingy right here. All I need is my change of character, because my change of character is simply this. So the market has been leaving out lower highs, lower highs, lower highs, and then the last lower high got broken by this low, as you can see right here. So right here we have a change of character. This is our change of character. I'm just gonna write it, change of character. So we're still in the sanifundisa ngani nge-liquidity, guys. Liquidity angithuka kancane ngesingisi, hayi isingisi phela nasibuye sibe nesicefe phela, hayi yabona nje. So okay, sibe ne-change of character laphayana. I-change of character siyithola ngani? Ngokubreaka one of the lower lows if the market is trading bullish. So this was a bullish pullback, angithi. So the market now is confirming that right now I am bearish. This is simple as someone who's walking towards you and then they turn back. But by the time they turn back, you realize that this person is ready to go back again. Yeah, so something like that, or a car doing a U-turn, but the driver turns around the steering wheel. You are able to see that the driver is ready to do a U-turn or a turn or whatever you want to call it, but a turn. No, yeah. So the market is turning after giving us a change of character right here, and then it should take out all these liquidity lows, this liquidity low, this liquidity low, this liquidity low, this liquidity low, in order to maybe like pull back or do whatever move it wants to, because below this low as a stop loss. There's someone here took a buy here, someone here took a buy here, someone here took a buy here. So there's a stop loss here, a stop loss here, a stop loss here. There is also a stop loss here, also a stop loss here, also a stop loss here, also a stop loss here. So there are stop loss above the highs, stop losses above the lows. So it's something like that. That is liquidity, guys. So now, do you understand what is liquidity? If you don't understand, guys, or there's something you do not understand, tell me on the comments below. Okay, so right here we have a bearish market. Confluence number 1, market structure. See, these are my confluences right here. So confluence number 1, we have a bearish structure. The market is clearly bearish by dropping down, pulling back up a little, dropping down, pulling back up a little, dropping down, pulling back up a little, dropping down, and pulling back up a little, then dropping down, then pulling back up. So now we expect the next drop down, maybe to take out this liquidity low. If you can see, this is a low. See, it's a candlestick low. This is a low. On the 4-hour time frame, it's a clear low. So the market needs to take out that thing, that low, that liquidity low. This is liquidity. Let me write it. Let me just write it down. Liquidity, bro. Yeah, liquidity. This is also liquidity. Liquidity. Now you understand that every low, every high is liquidity. So now, how do you trade that liquidity thingy? So you understand that the market needs to come back down and take out this liquidity. The market needs to drop down and take out liquidity. Overall, the market is bearish, so we are dropping down, right? So why are we bearish? Because we are breaking structures to the downside. Simple. There's a breaker structure, a breaker structure, excuse me, a breaker structure. Okay, it was been structured. A breaker structure and then another breaker structure. So now we have like the current breaker structure, and then we expect the next one. Okay, so we have this current breaker structure. We are expecting the next one to be right here. Excuse me again. So feet. So we have a breaker structure right there. So the market is clearly bearish. Market structure, confluence number 1 is bearish. The market is bearish. Then I drop down to my 4-hour time frame where I look for my entries because the market is bearish, right? So I want to enter for sales. Sales, guys, not just anything. Sales. And then confluence number 2 is supply, guys. Supply. As you can see, supply is clearly a buy before the sell up. Before the sell down, I am so stupid. Okay, this buy up right here before the sell down is your supply. So now you can see that the market is inside supply. So I'm just gonna remove it because it's gonna blur like everything else. And then let's get internal supply, guys. What do I mean by internal supply? Supply that is within the roll down. What roll down? From this sell to this high, from this high selling down to this low. Within there are supplies that haven't been retested. Number 1, this is the supply. Let me just write this one. Let me just put down this one. That buy before the sell is the supply. Where is the second one? This one. As you can see, the market tapped inside its supply and then started dropping down again. So let's say the market hasn't like pulled back inside that supply, so you're just gonna draw it because it was a fresh supply that never got retested before. Number 3, what do I need for my number 3? Third confluence is my PVD. I'm just gonna be a little bit quick with this video because I wanna, yeah. So the PVD, you draw it from the high to the lowest point, and then you want the market to enter inside the 0.5 Fibonacci retracement above the premium, inside the premium, above the discount, because the discount is the blue area and the premium is the red area. So I want the market to retrace inside the premium area where I could look for my sales, because on the red area we sell, on the premium area we sell, on the discount area, on the blue area we buy. See, so it's something like that. So now I see that the market has retraced inside my PVD, my premium, inside my supply. And what do I need? I need liquidity now. Now I need liquidity. Let us mark our liquidity. This is liquidity. It's a bump in the road, guys. It got taken out, as you can see. This is also a bump in the road. It got taken out, as you can see. You're not expecting this one, right? This one. It's also a bump in the road, right? It hasn't been taken out. We don't need to take it out because we've taken out this one and set inside the supply, and we don't need to go back to that supply again. And overall, above that supply is still liquidity. As I said at the beginning of the video, every low, every high is liquidity, guys. So right now, what do I need? I got my market structure is bearish. I got my supply right here. I got my PVD. The market has retraced inside the premium. I got my liquidity. What do I need? A change of currency. So how do I get my change of currency? Simple. Save my pad. So the market pushed up, pushed down, pushed up, pushed down, push up, push down. I was in buys here. I'm gonna tell you why I was in buys. So push up, push down, push up. So where is my change of character low? My change of character low is simply this one, or you can take the internal one. Or let's say, okay, the market pushes down again and then pulls back inside there and then drops. So that is your change of character low. Which one? This one. That is your change of character low, guys. That is your change of character low. I'm just gonna write down put down my breaker structures. There's a breaker structure to the upside. Also, this one is a breaker structure to the upside. Excuse me. Also, this one is a breaker structure to the upside. That was the last breaker structure. So now we're expecting what? A pullback to not a pullback, just a drop down to change character right here. Or we could take the internal change of character, which could be this low. See, because we were trading bullish like this, buy up, sell down, to buy up. So we're expecting another sell down to change this character low, and then starts pushing down again. So let's just remove this one so that the market could be a little bit clear for you guys. So why did I take that buy? Look at this. Let's say the market is here. Let me remove this because okay, I'm just gonna lap. Let's say the market is here. See? So the market is taking out this liquidity. So I know that I need to tap inside the supply and then start selling down again. I need to tap inside the premium and then start selling down again. I haven't got those two confluences. So just by taking out this liquidity doesn't mean the market is ready to like sell again. It's not ready. It's not inside supply yet. It's not inside premium yet. It's not ready to sell. So that was the reason why I took down. I took those buys because the market came back down to take out this liquidity low. Excuse me. I need to mark it to take out this liquidity low right here. That was the liquidity. That was it took out stop losses and then it was ready. It had money to push up again. You know, it had money to push up again to maybe take out also this liquidity high because it is liquidity, guys. Come on, you need to understand this term liquidity. So the market is let's say the market took out this liquidity, then I dropped down to my 1 hour time frame because I knew you could see. I knew we have to buy to the upside because um we haven't entered inside our supply, we haven't tapped inside premium. So as you can see right now, we did buy and then the market is inside the supply and it's inside premium. So yeah, so I entered for buys there. How did I enter for buys? Simple, guys. So number one, the market is bullish. Market structure number one, the market is bullish, right? Because the market is trading upward. to do the pullback and retest inside the supply and enter inside the premium and then start selling down again. So the market is bullish, right? So market structure bullish. So what do I need? I need buys on the 1 hour time frame or the 4 hour time frame. You see? So what do I do next? I take my PVD. Sometimes you don't need the PVD. Sometimes you just need confluences. I take my PVD. So as you can see, the market retraced inside the discount, and then it just it broke out the discount, proving that I am taking this liquidity to push back up again. Or it could have just taken out this liquidity and then this one and then start pushing back up again. But it was like, no, I don't have a change of character yet, because what is the fifth confluence? The change of character. So it dropped down to take out this liquidity, and then now we had a change of character, because look at this. We have a push down, a push up, a push down. That was the last push down, and then it pushed up again, breaking this change of character, guys. That was the change of character right there. See, I'm just gonna put a CH just to summon things up. That was the change of character. Where was my where was my demand to enter for my buys? My demand was clearly this one, because this demand broke this change of character. So yeah, that was my demand, my ammo. And then I waited for the market to pull back inside the demand, and then I got in from my buys right here. I put my stop loss below, I put my stop loss below the demand, and then I targeted these liquidity highs right there. As you can see, the markets did the impossible, guys. I could have just target the overall push up to take out to tap inside the supply. So as you can see, the market really tapped inside this supply. This gray area is my supply, right? Yeah, so that is how I got in for my buys. It was beautiful buys, guys. Yeah, I actually got in those buys, like, no cap. If you want proof, I can show it to you, but I'm gonna show it at the end of the video. So right now, guys, I've gotten all the confluences, but waiting for one more confluence, the change of character, which is this one. Yeah, so I'm waiting for the market to just drop down, change of character, retest inside the change of character, and then drop down again. I could look for my sales on NZDUSD, but I'm gonna be cautious with my sales on NZDUSD. Why? I'm gonna be cautious for now, because the dollar right now is currently bearish itself. So if the dollar is bearish, obviously NZDUSD should be bullish. As you can see right now, it is bullish. So yeah, man, when the dollar turns out to be bullish again, that's where I'm gonna enter for my shorts. Same as Euro USD, guys. Thank you for watching. Let me know in the comment section if there's something I'm missing out, or let me know in the comment section if there's something you do not understand. And overall, again, why do we need to sell, to take out these liquidity, guys? This liquidity, this liquidity, this liquidity, this liquidity, this liquidity. Every liquidity low right here, it needs to be taken out. So it's something like that, an extra. And in addition, this liquidity, as I said at the beginning of the video, that candlestick low is a bit clearer on the 4 hour. As you can see, this is liquidity low. See, so it's something like that. So the market needs to go and take out that liquidity. So I would enter for my shorts maybe when the market retraces inside this supply, because this would be, if it were to give us like a change of character right here, this buy before the sell down that will happen there, it'll be my supply. That is where I will enter for my sales when the market retraces inside the supply and targets that overall liquidity low and put my stop loss above the supply, or let me just make my stop loss a bit wider so I could be in a safer position, you know, and just target this that liquidity low. And overall, we are waiting for the next break of structure because the market is clearly bearish, as you can see. Bearish, bearish, bearish. But this thing happens every time, guys. Every time. Every time. As you can see, the market. Look at this. I'm gonna be quick. Look at this. The market is bearish, right? After breaking down this break of structure, coming back up to take out this liquidity, and then giving us a change of character. Where? Simple. Where is our change of character? Right here, guys. Right here. Look at this. We will push up, a push down, a push up, a push down. The last push up, and then change of character. Look at the next candlestick. Look at the next candlestick. So this one dropped down, and then there was the next candlestick, which did what? Entered inside that sell before the buy, because the sell before the buy is now your supply. Guys, this is so excuse me for this one. This is so easy, guys. This is your new supply, right? This is your supply. The strongest supply because it took out liquidity right here. And you could have it could have answered for your sales right there, guys. This is so beautiful, guys. The strategy happens every time, bruh. And when I say every time, bruh. And you could be worse. You could be holding. Excuse me for that thing. Excuse me. Yeah, worse. You could be holding. Look at the profit, guys. Look at the profit. Oh my god. You could be holding. Maybe just targeting. Yeah, targeting that low. You could be holding this thing. Look at this. So beautiful. Happens every time, every day, everywhere, every time frame. The 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, daily, weekly. Every time frame, it happens. Every time frame. Time. Thank you for watching, guys. Don't forget to leave a like, and share, subscribe, turn on your notifications whenever I drop a video so that you can get notified. Thank you.